Discover untapped investment and market sentiment hiding in plain sight in today's Daily Reddit Insight for July 28th. MSTY. Too good dividend alert. Yield near $25 per share sounds lucrative but rarity. Unclear listing, payout sustainability, and scam risk threaten capital. Verify ticker existence. Audit financials. Assess cash flow, management integrity, and dividend history before committing. Deploy only risk-tolerant capital slowly. India's crypto crossroads. Regulatory fog stalled adoption, muted institutions, limited innovation, risked competitiveness, investor wariness persisted. How to seize. Study Coins Act 2025, build rights-first compliant products, secure Bitcoin, Ethereum positions, collaborate with Indian exchanges, engage populous digital market early. Contrarian plays, tobacco and China rebound, market shuns tobacco over regulation, China amid geopolitical fears, leaving valuations low. Seize upside by studying resilient tobacco leaders and diversified China ETFs or large CACs, deploying cautious capital for high-risk, high-reward gains potential. AI data centers, power play. Pain. Skyrocketing electricity demand strains grids, requiring massive capital and reliable, scalable supply. Chance. Target utilities serving data center hubs, power infrastructure equipment makers, and specialized data center REITs for sustained AI-driven growth and income streams. Robinhood's 200% rebound, post-IPO plunge, shaken holders, monetization doubts, regulatory scrutiny, valuation anxiety, high volatility. Seize momentum turnaround via careful fundamental review. Leverage crypto and options growth, scale in on strength or pullbacks. Manage risk tightly with a clear exit plan. Bitcoin's enduring value and mining potential, solo block win rare. Mining highly competitive, costly, unpredictable. Investors gain upside by buying BTC or publicly traded mining stocks, capturing bullish fundamentals without operational risk, capital outlay or technical expertise required for solo mining. AMBQ low-powered chip IPO. Volatile semiconductor listings and opaque finances worry investors. Capture upside by entering early into energy-efficient SoC market for IoT AI, validated by Google and Samsung. Scrutinize prospectus, financials, competition, allocate cautiously to manage risk and maximize returns. Blockchain's time-crystallized value, hype, and decentralization buzzwords lure investors into fleeting speculative tokens. Ignoring blockchain's entropy resistance and lasting utility, capture the opportunity by backing core Layer 1 protocols and real-world applications that anchor immutable data and time for enduring returns. Retirement nest egg asset boom. Savers face complex choices and underperforming funds amid $29 trillion growth. Invest in leading asset managers or diversified financial ETFs to ride expanding professional wealth management demand and capitalize on aging population seeking secure income streams long-term. Coinbase, revaluation. Traditional platforms losing trust, regulatory uncertainty, valuation doubts, cautious bullseye adoption of rebranded base app, user growth, revenue traction. Seize upside by analyzing coin financials, tracking base app downloads, engagement, onboarding skeptics, positioning early before market reprice. Censorship-resistant payments rise. Traditional processors stifle Steam and others. Centralized finance threatens transaction freedom. Users need uncensorable channels. Invest early in crypto's real utility. Accumulate ETH, SOL, and privacy-focused payment networks powering decentralized, unstoppable commerce before mainstream demand globally explodes. Bullish NVDA earnings play. Investors fear options risk, earnings volatility, and AI hype overvaluation. Research upcoming tech earnings, accumulate shares or strategic calls, manage risk, capitalize on NVDA's dominant AI chip growth, time entries, set targets, monitor sentiment, exit weakness. Africa's economic surge via China trade. Tariff removal sparks export boom, but capital, infrastructure, and consumer demand gaps hinder growth. Seize upside by investing long-term in Africa-centric ETFs or firms exposed to infrastructure, consumer goods, resources, and expanding Sino-African trade.